Happy Friday, Chris here. What a wild week. There's so much to talk about. I promise I'm going to keep the video short though. I'm going to start with the firing of 14 board members of Fannie Mae and Freddie Mac that happened in the last 24 hours. This is part of this administration's attempt to make housing more affordable. And so gutting Fannie Mae and Freddie Mac is part of their plan. And is there some meat on the bone there? Absolutely. Fannie Mae, Freddie Mac, and Ginnie Mae, who kind of, they're the behind the scenes for most mortgages out there, recorded profits of over $30 billion last year. A lot of potential savings that can be passed on to homeowners. Also, in the last week, we've had a major Fed meeting, and it couldn't have gone any better. Well, technically, the Fed did not lower rates. That wasn't expected, but they have changed a lot of their rhetoric for projecting forward for 2025. For example, they are now showing 2 rate cuts back on the table, and they're also talking reducing their quantitative tightening. That means what they're doing right now is they're putting excess mortgage-backed securities, excess treasuries into the market, which artificially pushes rates higher. They've announced that they're going to taper that off. So that's a big deal. When you have less supply of debt going into the market, that is really good news for mortgage rates. Additionally, they raised their unemployment expectations. So that is a great indicator that they're trying to bring down the long run interest rates. That is the number one reason that they bring interest rates down, is to stimulate employment. So a lot of good things coming out of the Fed in the last week. Also, purchase application data continues to show an upward trend, not only week over week, but year over year. In fact, we have the best increase in mortgage purchase application data that we've had in years. Mortgage purchase application is for sure the best indicator of demand that we have available to us. And so that is it, showing increased demand. It's usually got about a 30 to 90 day lag. So really good indicator of some strong demand coming for the spring housing market this year. So, a lot going on. Overall, mortgage rates still hovering almost at a 4-month low, right around 6.7. That's the national average, 20% down, good credit. Of course, if you have any questions on financing a home, give us a call. Happy Friday.